Thank you, Ramesh. Thanks, Prem. And thanks, everyone, for joining. And thanks, Madhu, for a great introductory session. It's the best I could have asked for. Because as we start with investing, I think the first question we have to ask ourselves is, why India? And I think Madhu's done a fabulous job in answering that question. So if we have everyone's agreement, can we get ahead of that question? So with any investing, first you want to look at growth, right? Is my asset going to be stable, growth, and what's the potential? So I'm assuming that that is a question we've answered. We can move to the next step and say, okay, how do I now go about accessing India? And in some sense, therefore, take a step back and say, what's getting in the way? And where are the issues, if any, right? So just to recap what Madhu mentioned, what Neil and Jignesh Bhai mentioned in the morning, I think it's a multi-decadal opportunity. It's not a short-term opportunity, so it's a long-term. Prem captured it very well through the fill it, shut it, forget it investment opportunity. Some of the data here, 28 years of median age, so a demographic dividend that we can all participate in. A very manageable fiscal and current account deficit. So macroeconomic indicators looking really good, and a history of performance and growth through the markets, and at a very reasonable, not excessive, not very conservative, 12.5% over the last 10 years. So stable long-term growth opportunity. Looking ahead, CapEx expected to grow 5 times. Growth in consumption expected to grow 2 times, and we spoke a bit about that in the panel, and to emerge as the 3rd largest economy by 2030. So really the question is, why would you not be a significant participant in the 3rd largest economy if you can? And what we'll discuss now is how. So as we go around talking to investors, and I'm sure some of these thoughts, concerns may resonate with what you were hearing, what you felt. The common concerns, at least I see, are, it's very cumbersome, there's too much paperwork, I need to open a bank account. I really don't know whether the regulatory and political regime will allow me to live in peace with all the data that I have to share as a global investor. A PAN card, bank account, tax filings, these are very onerous. And, yes, we trust the regulatory framework, but you don't know if that's going to be stable, whether it'll keep changing. And somehow there's this idea that, it's a bit foggy. Ramesh mentioned, the fog outside here and the room here being very clear. And I'm trying to tell you that, look, it's actually very, very clear. It's no longer any fog in the Indian regulatory environment with respect to attracting foreign capital, including from NRIs. So if we were to regroup these concerns, and I've tried to do that, into 3 broad buckets of what I think most of us will agree investors worry about. First is, what's the investment vehicle that you're choosing? Is it an AIF, PMS? Is it a mutual fund? How do I access? What sort of legal framework and paperwork is required as the access vehicle? The second is, within that access vehicle, what sort of product choice do I have? What asset classes, what manager, what selection, etc. And the third bucket I would put is around taxation and cost efficiency. So net returns to me, after tax, after cost, after charges. Right? So do we broadly agree that these are the 3 areas of concern beyond looking at the market? So once we've agreed on India, these are the 3 major factors that we want to solve for, if we were to keep it simple. Now, if you were to look at either ourselves as an investor or if we ask our investors, I think by and large, what I hear is, if you were to do a wish list, what would you like to see in a good investment vehicle? It should be very simple. The KYC should be very smooth, quick onboarding of customers. So it's not like a couple of months and papers going up and down. Product choice, a good range with some track record and some governance standards I can really rely upon. And taxation is, if it's nil, it's best. If cost is the lowest possible, it's best. So as low as possible on taxation and cost, right? So do we largely agree that these are the 3 things most of our investors will want as a wish list if we were to look at investing into India? Now, if this is largely what you'd like to see from an investment vehicle, I think the question is, how do we fulfill it? And what I'd like to share is that we are almost, if not already there. And how is that happening? Firstly, I think we must recognize, and if you haven't gone deeply into it, I would highly recommend, please do, look at the Gift City ecosystem very seriously. Because what it solves for first is that it's a tax-exempt structure. So no tax-related documentation will be required from your end in that sense. We also spoke about the fact that there is no bank account required, there's no PAN card required, which is the 2 or 3 friction points for many global investors. So how do I access it? And this paperwork is actually getting in the way. My investors don't want to do that, right? And KYC and onboarding is now video-based. Yes, there is a paper-based option as well, so you can just print a PDF, sign it, wet signature, mail it across, courier it across. But there is a video-based KYC that most providers also allow. So it's very smooth. It's not what we used to worry about, right? So that's on the platform front. Clearly, there is a platform already available that solves for some of the concerns we spoke about earlier. Then we come to product choice. Now, isn't it true that when we buy many products, we are actually taking a bit of leap of faith because you're trusting a manager, you know the asset class, it's India. You're trusting a manager, and you're hoping that past performance and past results can be replicated in the future because many of these will be relatively newer entities, newer products, right? The fact is that actually now in the feeder structure in a mutual fund, you can access something that the locals are accessing and have been doing that for decades. So as they say, when you travel to a city or a country, eat where the locals do. And you're able to do that sitting here. So you can actually access what locals are accessing so seamlessly, so smoothly, through a feeder structure. And guess what? Therefore, whatever is the scale and tax efficiency that the local investors enjoy, that directly gets transferred to you as well. So you're not only benefiting from track record and performance history, but also scale benefits, taxation benefits, which are unique to the Indian investor for so many years, right? When it comes to cost, because these are scaled up funds, which are serving millions of customers already, actually, Jignesh Bhai mentioned that as well, cost efficiency in India is probably the highest, among the highest in the world. So many of our funds have plans where the total fund management expenses that we charge may be as low as 30, 40, 50 basis points. So that's the cost you're paying for accessing a fully scaled up, world-class, very highly regulated fund management instrument, which millions of investors are already participating in. And all you need to access is actually, like we said, it's an expressway built specifically for you, so you can jump straight in. As an illustration, and I'm just illustrating it, so again, Jignesh Bhai mentioned this is not a sales pitch. This is not something that we want you to look at from that standpoint, but just as an illustration of how simple this could be, because without that, it just looks like words on a slide. I'm taking the example of a specific fund, our small cap fund, for example. It's been in existence in India for 5 years. We launched it just before COVID because we thought that small cap had a good opportunity. It has a size currently of $2 billion, so it's a reasonably sized fund. Fund ratings are available. So it's not just us, but you can look at any global or local fund research provider to look at how they treat it. And of course, you can do your own research, look at the portfolio, et cetera. The actual fund management cost on that fund, because this is published, is about 40 basis points. And if I were to look at the access cost through Gift City, that largely, and this I'm just looking at approximations, comes to about 70 basis points or so, right? So now think about it. For just about 110 basis points, you're able to access straight away something that is scaled up, has years of history, is independently rated, fully regulated, and at a very, very low cost, low relative to most other structures that at least I come across, right? And guess what? You're getting the same tax benefits that the local investor in India gets, which is mutual funds are not taxed for the investment gains they themselves make. So that's a benefit that you get through right now. Now, from an experience standpoint, like I mentioned, with video KYC being available, in 3 or 4 days, you could be actually set up with an account and the 5th day, you could actually have started investing and getting your NAV started. Keep in mind, these are daily liquidity products because it's a mutual fund underlying. So with that type of an experience available, I would argue that sometimes we have this foggy idea of how India is because we've anchored it to where we went last visited and the bazaar we went to, etc. And somehow that seems to come through in our investment allocations also, that pata nahi, I don't know, this is that, etc., etc. But actually just wake up. This is now changed. It is far more familiar. It's far more organized. And specifically for the global investor, if you are solving for most of the fundamental challenges that investor has, then I would argue this is absolutely the right time to invest simply, smartly, and I would say India for the long term. So thank you so much for your time. Like I mentioned, the idea was to keep it simple. Thanks.
Thank you, Vishal. That was beautifully structured, incredibly insightful. Your message on disciplined simplicity resonated strongly with the audience, especially the structuring aspects. I particularly liked the bit about eating where the locals do. But in actual fact, I'm sure most of you would agree that when we Indians go to a new place, a different country, we look for Indian restaurants to go and eat. Right? Well, some comfort in numbers, the Chinese do too, if that's any consolation. But yes, eating where the locals do is very, very good advice indeed. I have a question for you. When do you see ETFs coming to India?
No, so actually ETFs and passives is already a very large part of our ecosystem. Unlike some markets which only chose ETFs as a way for passive investing, India actually offers index funds as well. So actually it's not just one, but two choices you have. So if you are more used to a broker-dealer demat account format of investing through markets and screens, there's a full ecosystem of ETFs available. If you're okay with a daily NAV and a fund vehicle, because cost I would argue are similar and can be similar. Therefore, there's no intraday price fluctuation, and you don't have to go through a broker-dealer. Mutual fund platforms now are very simple. It's a click and buy, daily NAV model. You don't have to worry about bid-offer spread and things like that. Then an index fund model is also available. Actually, the range of asset classes available is quite staggering now. Just speaking for our fund house, we have over 25 index and ETF strategies. Broad market, sectoral, and the smart beta quant-based strategies. So there's a very wide range available. And certainly, if that is something that you'd like to explore, which is index products rather than taking fund manager risk, please do. But this debate about are active managers really beating the passive world ETFs has been on for a long time. I think more recent data seems to suggest that yes, active managers have indeed been able to beat
alpha,
and create alpha post expenses, post fees for many of the large houses, including us. So I think active would still be a good choice, I would think.
Very well, very well. May I now request Anita to perform the pleasant task of felicitating Vishal.